a bit belated episode of Blockrevision, as normally we are broadcasting live 8:45 East time. Today it's a quarter later than it's supposed, but eventually will lead to the same important elements that may bring the bigger perspective for you as become a better trader or investor. So if you just was looking for the most important news regarding market, commodities, indexes, stocks and crypto, you found the right place. So don't really fall into despair due to those lowering valuations. Just put yourself in a position that will put you in favor of growth for your portfolio and growth as a personality of trader and investor. So I'm very glad to welcome you at another episode of Blockrevision. Today we are broadcasting live, and I found hopefully that you may find this episode very worthwhile. So let's get into it. So we are ahead with JPY already been wakening up. So JPY recently told JPY, I mean JPY's Bank of Japan, told that this recent price action of Japanese yen has been one-sided. The currency been weakened by traders, by money managers and other funds as well, and obviously by retailers that are finding Japanese yen as the one weakening currency that was suppressed by this very loose fiscal policy of Bank of Japan. Right now, Bank of Japan is intervening and recently told that those elements of JPY's policy will be eventually started to get bit more hawkish. For now, we could see that some unwinding of yen shorts supposed to happen, particularly if the Bank of Japan continues to intervene in the market on the behalf of the Finance Ministry over next days. So, but does it mean outright that you should go to an exchange and throw all of your money into service provider to convert all of your dollars to a Japanese yen, considering that recently a drop that far in terms of price? I would say not until US Treasury yields turn lower or the Bank of Japan tweaks its monetary policy. For now, it's the intervention where we might expect that those levels of Japanese yen might be defended by central bank, but it's still too little to say that those dovish days are over. We are right now, maybe we'll jump to the main thesis of this episode, as we are finding that hikes around the globe are rolling over in the very rapid pace. In terms of Switzerland's bank, the Swiss National Bank raised interest rates by 75 basis points to bring borrowing costs above zero for the first time in almost 8 years. So we can observe that the banks are hiking interest rates in tandem accordingly, and higher interest rates and slower output growth also appear to be weighing on business fixed investments. So I'm mentioning this one as to let you know that this environment we are right now going through is something a bit more tougher for economic expansion, for entrepreneurship expansions, and more, I would say, firm endeavors that may boost the economy up forward. So economic weaker growth may recently been also restraining some other elements that are really coincided with that fiscal policy influence many areas. So that's kind of a I would say very important to take a notice that will be the time of rather thinking of defending or securitizing the companies in terms of its possible difficult time become that will go ahead. And right now I would say that the trend globally is that the crisis may get even to a eventually a global term in terms of I would rather say that we shouldn't rather be afraid of the words global crisis due to those valuations. Recently, even though Switzerland's SMI slumps more than 20% from December highs, and that was the barely the last result that among indexes that were keeping above this 20%, and that's why we may find that there are no right now, I would say, safe zones where we could get away from this hiking interest rate policy, especially if this profit margins crack in coming quarters, as we fear there is little caution. I wish the media would stop saying that the market fears going into recession, as we are already there over. Especially in the US, we may maybe hold up for a moment as labor market has remaining tight with unemployment rate near 50-year low, but definitely among the globe we are relentlessly heading downwards. Europe is in a deep recession and getting deeper. America is heading into a deeper one, but it's already in a mild recession, and Asia is trying to mask its problems by very loose fiscal policy, but it cannot last forever. So that's also something that is spoken in many analysts by Fed that cannot admit that they led the economy into a crisis, into a recession, where we can find that citing Mrs. Yellen, recession is a period when there is excessive unemployment, and that's the one of the factors that hasn't broken yet, but about 95% of other indicators has already been busted. So changing definition of the recession is definitely something that can be really faithful, and that's why I wouldn't really bother what Mrs. Yellen is saying. 60-40 portfolio keeps bleeding, and that's something that is literally going to and leading to sleepless nights around every investor that was tipping on that type of portfolio as the one of the most safe one. So this one is bleeding and has the worst performance since 1961. So we haven't had that bad beginning of a year, or I would say not beginning, but first 9 months of a year for 60 years. So that's why many of investors may be in a kind of a psychological perturbances due to how their money performs. Hopefully that state won't persist for long. In terms of market outlook, I would like to say that so client buybacks leading rate on S&P 500 buybacks. So we are right now in a territory of a where corporate clients, some of a worry of a future performance. That's why they slow down buybacks year over year. And due to recent point of view that I just stated, the treasury yield curve hit its deepest inversion in 4 decades, and there are many voices getting louder that this economy, even if now it's quite strong, will not be able to withstand tighter monetary policy. And that's why with this one and vision, we may find that the bust may need to be proportional to the boom. And regarding this, we've never had a boom this big in terms of size, and we've never had interest rates this low for that long. We have the quickest pace of hiking interest rates in the history, and that's why we find that those dead bubbles, those misallocations of capital and resources that we finding may lead to eventually not shallow but possibly a deep recession. So I would say that we really entered a danger zone, and the massive recession is possibly the one to be considered and the one to even maybe remain for longer. I would like to speak right now about crypto outlook, and this one showing summary. I would like to make a little bit more positive stance right now, as also adding up this broader spectrum of an issue. Adoption among cryptocurrency as surging, even with those valuations been dropping. We've observed that especially those countries that have some problems locally, going through some fiscal problems, is adopting cryptocurrency very well. Among them, there's India, Thailand, that recently have some problems, especially with devaluing the currency in some pace. Vietnam that also gone through hyperinflation back a couple years ago. There was around 80s, 90s, and Philippines, Indonesia, Malaysia, Pakistan, Kazakhstan, Iran, and so on, so forth. And that means that typically cryptocurrencies have been adopted the most in the most accelerated fashion in those countries that really do need it. And the International Telecommunication Union estimates that 4.9 billion people, that is around 2/3 of world's population, were connected to internet by 2021, and we have this aim as a civilization to have 100% been connected by 2030. And with this digitalization getting faster, we may observe that those adoption of cryptocurrency is also speeding up. So the adoption is kind of a function. The adoption of cryptocurrency is kind of a function of accessibility to internet, and also of some disturbances with the fiscal policy. So even with those evangelists touting crypto and Web3 that may have failed to deliver many answers, we can find that they are asking the right questions, and among them is how to bank the unbanked. Many of habitants around Africa or Asia or South America don't have an access to bank, and that's why the access to the internet will be this the switcher that will allow its users to get an access to digital goods as currencies, digital currencies. So the blockchain, to some extent, is a game changer, and it's going to restructure the back office of the world. So right now we are eventually going to market mover section, and with this one let's get I just switch off the bookmarks bar. So I would like to have a look at today's data and what it has brought, as we can observe everywhere. There were PMI flash being delivered, and nearly everywhere those gauges are below 50. We are awaiting for the strongest economy in the world, the US, to publish it at 9:45, and it will be kind of a harbinger of what may come next. As if we have it, as we drop below 50, there will be no other arguments from not admitting that US is in a recession time, in my opinion. Of course. So this is from economic calendar. On Monday, I just switch to the next week. We have Bank of Japan Kuroda speech that will tell us a bit more about the fiscal policy of Bank of Japan, and that's something we are very hungry to watch. And about the next days, I will tell you over on Monday. In terms of trade idea, let's jump to trade idea here. I cannot really, oh, that's stupid. I cannot really switch off on this upper bar with a shortcut. I don't know why. Whenever I just switch my windows, it turns up. Alright, but don't bother. Trading view. And for today, I have for you your favorite in terms of volatility asset, that is Bitcoin. So today we'll talk over Bitcoin, where it is and where it's going. So right now we are after this massive slump in terms of price action. We tried to recover, but this 25k that was the level that it couldn't withstand, and right now we are testing the bottoms of 1840, 18400s, and we have still a area to go to lower 1800s. With this one to come, as this large volume has come up, we may find it kind of a very fierce switch of buyers and sellers is observed. And with this one, with higher volume, we could find that it's kind of a harbinger of a upcoming stronger move. The same happened back right there during June's distribution that eventually led to a major sell-off. Right now this chart doesn't look anywhere strong, and for this one we've been closing below areas of recent lows of June, and that's why I do find if we won't get stopped by this 17,500s, we are on the way to get lower. For this one to happen, we may also have a look at recent exchange net flow on all exchanges, and recently we've seen that on those drops, we've observed massive inflows on exchanges that was suppressing Bitcoin's price. That's why this selling pressure still remains strong. Supply is exceeding demand. That's why I do find there's a will of Bitcoin to get lower. Even with this crypto fear and greed index, I wouldn't really bother this one, as we still have a room to get back lower to 10s area, the sentiment that been observed in the middle of June. So in terms of trade idea, I won't bet right now, as we haven't make a correction after this recent move that might be kind of a fateful. So in order to take the position right now, but I do find that kind of a reaction back to these areas of recent hike should been expected. So I do find that Bitcoin will get back to around those 20K's area before going downwards, and I don't really expect maybe going that far to those 21K, but this is the level of suppression, and that's where this slap should take place, slap of supply should take place. That's why in terms of trading idea, I would bet this to happen. So Bitcoin right now for me is the one to go through. That path with risk-reward ratio at 3, it's still lucrative to take such a bet. So as a reminder, my bet should take place at around 20.6 hundredths with a stop loss right around these levels, and with a take profit at 16.4 around. So in terms of area of a trade, we may hang over around here, and if the price will get around within this blue box, I would have my alarms set on, and in order to take such a bet. So that's it in today's episode. If you have any questions, just put it in the comment section below the video, and see you on Monday, 8:45 to 9 a.m. See you there.